What's going on, guys? We're going to do a little technical analysis. Currently, it is Wednesday, the 18th. So, today was a horrible day in the stock market for a lot of names. Pretty much everything on my watch list was red today. Pretty much from the word go, we started to sell off 5% down on the NASDAQ 100 and 4% on the S&P 500. So, I mean, the last time we had these big of down days was back in 2020, and before that you're going to have to go back on like a monthly time frame chart and kind of see but I mean, let's just put it this way. If you've been in the market for under 3 years, you really haven't seen anything like this. To compare this to the March 2020 kind of corona crash that we had, that was very, very short lived. Yes, was it violent? Of course, but it only lasted about 3 weeks from peak to trough, and then we just immediately reversed. All of that money got pumped into the economy with all of the stimulus, and the market just pretty much screamed for about a year on small caps and about a year and a half on mega cap stocks. With that being said, this is a very different market cycle. This is a very different bull market or bear market. In Tesla, is not looking good. Yesterday a lot of stocks were setting up to make a push to their 10-day moving average, and a lot of them that had reclaimed the 5-day moving average looked really, really good. But everything was immediately stuffed at levels of supply and then rolled over. That's why if you are an investor, you do need to learn technical analysis. Now, I do see a lot of fundamental um, YouTuber slash investors out there that, they can understand why the market is going down. Companies have good earnings. Look at from a day trader's perspective here, and I'm not a long-term investor. I'm just a pure options day trader and scalper. And all that kind of bullshit that day traders cannot be profitable on a day-to-day basis and blah 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 is all a bunch of horse crap. If you do know technical analysis, you can be profitable. You can beat the S&P 500. You can beat the NASDAQ 100 on a year-over-year basis as long as you manage your risk properly. But a lot of these longer term YouTube investors really need to learn technical analysis, because on a lot of stocks that did lose their 50-day moving average when we were starting to come down, and their 200-day moving average, they could have easily done two things. They could have sold out of their positions and kind of stayed cash until we did find some sort of bottom and show proof that we are on some type of reversal, and or they could have held their shares, continue to average down, but also taken a hedge against their position by buying put options. I know the craze now is everyone wants to trade options because you can make a lot of money trading options. But options were originally designed to be a hedge in the market. They were never really designed to be traded like this, to be scalped and day traded the way people do now. That's a new thing, okay? And when I mean new, I don't mean like within the last day or two, but it's a newer thing, right? Obviously, people have been day trading options for quite some time, but it's a newer thing. Options were originally designed to be a hedge against your position or a hedge against the market, right? So when let's say you're holding shares of Tesla and you've been accumulating Tesla, let's say for the past 5 years, and you've made some decent money and you don't want to give away all of that money. And we had the big run up to 1200, and we kind of came down. If you would have simply said, when we lost the 50-day moving average, and that was back here on the last time we lost, it was on 426. If you would have said, I'm going to take a few put options here until we can kind of reclaim the 50-day moving average and kind of confirm that price going higher, I'm just going to hold my position. You would still be in that position, and you would have bought those put options at around $936, and currently we're trading at 700. So, if you would have taken 3-month out expirations or even 2-month out expirations, you would have made an absolute killing, down 200 points on Tesla. So it's like, I kind of, don't get the thing, the kind of same old song and dance that I see a lot of on YouTubers, especially from these big channels that kind of preach, just to continue buying the dip, continue buying the dip. The problem is that a lot of these YouTubers, or a lot of these, let's say, people who have a larger account, portfolio account, that can afford to buy in and keep buying the dips, that's all fine, but your average person, your average retail investor does not have enough money to continue to average down on every red day. So it's like it becomes a little bit frustrating. That's why I say, if you are a newer investor, I would definitely recommend at least learning how to trade options. That way, when we do get into a market cycle like this, like a bear market, they don't come around often. But when they do, they hit very heavy. So just learning how to trade those options so you guys can kind of generate that cash flow until things kind of pan out. Now, are things going to come back? Are we going to get back into a bull market? Things going to kind of settle? Of course, they're going to kind of settle. But as of right now, we still need to see where that's going to be settling at. We did close under the 5-day moving average on Tesla. The next support level that we do have here is going back to, kind of this recent low of 512, which was also a double bottom going all the way back to February the 24th. So any loss of 679 is going to be a macro flush. Now the day trader is going to look at, 698.72 is going to have room down to 680. So there's a little bit of a trade there. But if we kind of go to the monthly chart here, every candlestick is going to represent a month's worth of price action. This chart is going back 20 years. So obviously Tesla hasn't been around for 20 years. We can see it going back all the way here to 2011 when it was trading at a whopping $7.20. With that being said, you can see on the market, on the monthly time frame here, we just recently lost the 20-day moving average. Now I want to make something very, very clear. The last time we tested the 20 SMA was going all the way back here, and let me kind of zoom this out a little bit so we can see it better. The last time we tested the 20-day moving average on the monthly time frame was back in February. Okay, so the last time we tested was 3 months ago, and now we're back down here again, and now we've closed. The difference is that this last time we tested here, it was a strong bounce off that, and we did go on a nice rally. However, you can also see if 1243 is our top, this is our higher low, or this is our lower high, and this is our lower high. So what we would be looking for is this level going to hold, and are we going to bounce and put in a lower high, or are we going to wash out and then finally start to rebound? That's the question that we need to see. But if we kind of just, back up for a second here and look at the chart from a little bit more price action here, and let me kind of fix my charts for you guys so you guys can see this. But if we kind of look at more data here, realistically, the last time Tesla lost its monthly 200-day moving average was never. Okay, was never. So what is that telling you? From a macro point of view, from a big point of view, if Tesla does start to confirm $680, and I do not mean to scare anybody, and I do not mean to come off like I want to see Tesla go down, but if Tesla does start to lose $680, its next support is down here at $542, $550. Now, could it catch support somewhere else? We're going to have to maybe look at the weekly time frame. If we kind of just look at the weekly time frame and see, what we're looking at here, this is going to be a 3-year chart. And what we're looking at here is you can see that we've come down and we've tested the 100-day simple moving average on the weekly time frame. Now, the last time that Tesla was down here was never on a weekly time basis. And this is going all the way back to 2020, right? So 2020, we have not tested that 100-day moving average on the weekly time frame. So if Tesla does start to confirm, guys, and this is what you have to keep in mind, if Tesla confirms 677, it does have room down to 500. The next support is going to be the previous support here from 2021, where we were trading within a price range of around 500, let's call it 500 to around 600, right? So that $100 range there, we know Tesla can move up and down 50 points in a day. So, a lot of price action can be done within a short amount of time. So between $500 and $600 is our next little bit of mini support. Maybe 563 could be a good loading zone. Maybe 600 could be a loading zone. And hell, maybe even $500 even could be a good loading zone. If Tesla does not hold this level here, this $700 level is very, very key. The next bit of support that we have is 677, 680. Guys, it needs to hold. If not, any loss of Tesla below 700, 698 tomorrow is definitely a short. You do have about 25 points worth of room. So for all you day traders, you guys can catch this trade here. And if we close below $775, somewhere around that price range, right? Just kind of go to your weekly chart, kind of look at last week's lows here. If we start closing below that $680, guys, this thing can flush. And for a lot of you guys, it's thinking that Tesla can go lower because, it's one of the top dogs out there. The stock can go lower. I do not want to see it get down to 500, but 500 would be the next support zone. And then your obvious granddaddy, Mac Daddy of them all on the weekly time frame, your 200-day moving average is resting at around $392. Guys, this is a horrible time to be an investor in the market. Now, not in a terrible time to be holding stocks that you've been holding for the past 2 years. Is it going to be an opportunity to start buying some of these quality companies when they do get down and when they show us that it's going to reverse? 100,000%. Tesla is going to be a deal 5 years from now. Apple will be a deal 5 years from now, 3 years from now. Microsoft, same kind of deal. Yes, there is a buying opportunity. We just don't want to buy at 700 to see 2 weeks later we're trading at 500. Now, how devastating would that be if we bought in at 700 and then, in a month's time we're trading at 500? You would be devastated. So let's kind of see, do we start to reclaim the macro levels? If we do get a bounce off the 700, we do have room all the way back up to 875. That is, room for a swing trade, room for a trade there. But just understand, how significant that $670 area is. Next stop could be 500. So just kind of wanted to paint you guys a macro overview of Tesla if you guys do trade this or you do hold this long term. But I'll see you guys all in the next video. Make sure to subscribe to the YouTube channel as well as join the Discord, and I'll see you guys all later.